Everyone thinks US chip bans will cripple China's AI. But what if they're actually speeding it up? Quick intro, I'm Molly. I used to help run a $4 billion fund in everything I learned in investing. I'm here to share with you to help you invest smarter. This topic is particularly interesting for me because I used to analyze and invest in China stocks at some point. Since early August, China's equity markets have added over $1.2 trillion in value. The CSI China Internet ETF is up 11% in the last 3 months, and the Shanghai Composite is now at a decade high. Wall Street strategists are upbeat. Foreign hedge funds piled into Chinese stocks in August, driving a sharp jump in the CSI 300 index, which is the Chinese version of the S&P 500. Goldman is predicting a 12% return for the CSI 300. JP Morgan is even more optimistic, forecasting 35% potential returns for MSCI China and 24% for the CSI 300 by the end of 2026. And you know what? Up to $7 trillion of household savings are still on the sidelines. With the property sector in China still in a slump, that capital may head to the stock market next. Let's look at the context overall. The US has blocked NVIDIA's best AI chips from entering China, pulled TSMC's license to ship advanced tech there, and even said that they'd sell China not our best stuff, not our second best stuff, not even our third best stuff, and that is feeding nationalist sentiment. Enter Cambricon Technologies, an AI chip maker, and China's answer to NVIDIA. That stock has gone up nearly 5x over the last 12. Its first half 2025 revenue soared to 2.8 billion renminbi, over 4,000% year over year. It turned its 530 million renminbi loss into a 1 billion profit in just a year, which is quite a turnaround. The C1 590 chip hits 80% performance of NVIDIA's A100s, built on domestic 7nm tech, and the new C1 690 aims directly at NVIDIA's H100s. Cambricon is creating a similar moment that DeepSeek created for ChatGPT, and you could say BYD created for Tesla. Beijing has a clear playbook: tolerate foreign tech, build local rivals, push everyone to buy domestic. This has happened before and it's happening now. The whole thing isn't even about building the best chip. It's about building a chip that's just good enough. And when national pride and industrial policy align, that's often all that it takes. Companies like Alibaba and ByteDance are under pressure to justify why they're still buying NVIDIA chips, not because of price, but because it's becoming politically embarrassing. This isn't to say everything is perfect in China. Chinese economy is still fragile, consumption is weak, tariffs sting, property sector is not out of the woods yet, but in tech, the backlash is fueling a fire. And I think this short-term pain could be the seed of China's big comeback in tech and AI. If you look at the stocks, Alibaba is up 60% over the last 1 year, but it's still down 50% on a 5-year basis. MSCI China ETF is up 48% this year, but still down 17% over the last 5 years. So is China coming back? What do you think? Top Chinese ETFs are FLCH, MCHI, KTEC, KWEB, but before you pour any money, check out the Finvest ETF scorecard. It's completely free and simple to use, and it's the best way you can gauge the performance, expense ratio, and risk of all of these ETFs before you invest.